Welcome back to TalkTickers, everyone. Today we're going to be diving deep into the world of logistics with UPS's Q3 2024 earnings call.
You've got excerpts from the call transcript itself and a few market reports to go through as well.
All right, so the headline news is that UPS is back to growth. For the first time in 2 years, they're reporting increases in both revenue and profit.
Gotta feel good, right?
Yeah, I mean, consolidated revenue was $22.2 billion. That's a 5.6% jump.
Yeah, that's not small.
And operating profit surged, like 22.8%, landed at $2 billion.
Whoa.
That's especially noteworthy, I think, just given, the sort of economic headwinds everyone's been dealing with.
And it's not just beating estimates either.
Right.
Some analysts were predicting a much slower rebound for them.
Yeah.
UPS really seems to have exceeded expectations here, sending a strong signal to the market.
Absolutely. The key takeaway here is that I think UPS is showing resilience and adaptability in a less than ideal economic climate. They're not letting slowing online sales or lower manufacturing activity drag them down. Right. And they keep talking about this revenue quality idea.
Yeah.
What's the real story there? Are they just raising prices, or is there a deeper strategy at play?
It's definitely more nuanced than just raising prices across the board. UPS is really trying to prioritize profitability now instead of just sheer volume. You remember last quarter they were getting flooded with those short-distance e-commerce packages?
Oh, yeah, I remember.
So they made some pricing and operational adjustments to kind of address that.
So they're being more selective about the business they're taking on, making sure that each package is actually contributing to the bottom line.
Precisely. And we're already seeing results. Their revenue per piece is going up. And the CEO, Carol Tomé, she even said they expect that to continue. That signals, I think, a really good long-term vision for sustainable growth.
Right. Exactly what investors want to hear.
Exactly.
And they gave a good example of how this revenue quality idea is playing out. They have their B2B retail store replenishment solution. Right. Businesses are willing to pay a premium for those 2-hour delivery windows.
Yeah. Absolutely.
And UPS is obviously in the perfect position to capitalize on that need.
It's a great illustration of how UPS is using its existing strengths and infrastructure to get new revenue streams with higher margins.
It's almost like they're not just a package delivery company anymore. They're becoming like this sophisticated solutions provider.
Yeah, I think that's a good way to put it.
All right, let's talk about the USPS air cargo partnership now. It sounds like they're fully integrated as of October 1st, right?
Yeah.
Just in time for the holidays.
Yep, just in time. They did mention there were some hiccups during Q3.
Oh, really?
Yeah, as they worked to onboard all that extra volume. Transition costs were definitely a factor.
Makes sense.
But the system's up and running now, so they anticipate some really consistent revenue and good margins from this deal.
That's great news for them, especially with Q4 coming up. Having that extra air cargo capacity could be a real game changer during the holidays.
Yeah, absolutely. Speaking of the holidays, though, we have a really compressed shopping season this year. Only 17 days between Black Friday and Christmas Eve.
Wow, only 17.
Yeah.
That is a potential logistical nightmare.
It is.
I'm already feeling stressed about all the shopping I have to do.
Yeah.
How do you think this shortened time frame is going to impact, consumer behavior? Are we going to see more people going back to stores because they're worried about shipping delays?
It's possible, and UPS has factored that into their customer forecasts. They've, tempered their volume expectations for peak season, acknowledging that the shorter window could change things up.
So they're expecting slightly lower volume, but they're still gearing up for a busy peak season.
Right.
They're hiring 125,000 seasonal workers, I think.
Yeah, that's actually more than last year.
Really? More than last year?
Yeah.
Why is that?
I think they're trying to find a balance, right? They're preparing for a potentially chaotic peak period while doubling down on efficiency. The CEO said that on peak day, which they think is going to be December 18th, they'll be delivering 2 million more packages than last year, but they're doing it with a higher productivity rate.
Okay, that's interesting.
That tells me they're serious about optimizing their operations, They've made all these investments in automation and technology the past few years, so that's really starting to pay off.
Yeah, so it's a work smarter, not harder approach.
Exactly.
They sound prepared, but I'm still curious to see how it all plays out. It's going to be a crazy few months, for sure.
Oh, yeah.
All right, TalkTickers listeners, we're going to take a quick break and come back to dive into the numbers of UPS's financials and their outlook for the rest of the year. Stay tuned.
All right, welcome back to TalkTickers. Let's dig a little deeper into UPS's Q3 performance, see what other insights we can pull out here.
Okay, let's roll up our sleeves and get into the numbers. What are some of the highlights that stood out to you?
Well, I mean, right away you see that consolidated operating profit, $2 billion. That's up 22.8% year over year.
Yeah.
That's hard to ignore. And their operating margin hit 8.9%.
Okay.
120 basis point improvement from same time last year.
Those are pretty impressive gains, especially, considering what's going on in the broader economy.
Right.
What were the main drivers behind these improvements?
I think there are a couple of key things. They saw really strong volume growth in their U.S. domestic segment.
Yeah.
Average daily volume was up 6.5% year over year.
That's their highest growth rate in 3 years, right?
It is.
So their domestic operations are really doing well.
Absolutely. And they're also showing some really impressive cost management.
Okay.
Their cost per piece actually went down 4.1% year over year.
Wow. That's a big achievement.
It is.
Can you talk about the specific initiatives that are driving that?
Yeah, they highlighted two main things that are contributing to that.
Okay.
First, their Fit to Serve program. That's all about optimizing their management structure.
Okay.
That one's actually a little ahead of schedule. You can think of it as them streamlining corporate operations, making sure they're lean and agile.
So getting rid of any unnecessary layers, making sure the right people are in the right positions.
Exactly. And then the second initiative is their Network of the Future program.
Okay.
As you might guess, this one's focused on boosting efficiency across their entire network.
Mm-hmm.
They've closed 45 operational facilities this year, including 9 full buildings.
9 full buildings.
Yeah.
It sounds like they're really serious about optimizing their footprint, squeezing every bit of efficiency they can out of operations.
Yeah, no kidding. And it's working. They're seeing improvements in productivity. Their safety performance is trending in a good direction, which obviously helps keep costs down. And they're getting much more strategic about pricing.
You mentioned pricing. Let's talk about that a little more.
Sure.
What's the overall strategy there?
It really comes down to this revenue quality idea that they keep talking about.
Right.
It's about moving beyond just chasing volume and really making sure they're being compensated fairly for the value they're providing, making sure each package is actually profitable.
Right. So making smart choices about which business they pursue, optimizing pricing to really reflect the true cost of service.
Exactly. And they're using data and technology to do it. They have this pricing architecture of tomorrow technology, which is helping them make more informed decisions about pricing.
So it sounds like they're becoming a much more data-driven organization, using analytics to fine-tune their operations, their pricing models. It's a far cry from the old image people might have of UPS.
Definitely. And these changes are showing up in their financials. We've talked a lot about the domestic business, but their international segment also had a good quarter.
Let's talk about that. What were some of the highlights internationally?
So even though global trade flows are still, kind of unpredictable, they still saw a 3.4% increase in international revenue year over year. Hit $4.4 billion. But maybe even more important that their international operating margin expanded for the first time in almost 3 years.
Wow, that's a big deal.
It is. It's really a combination of revenue growth and, careful cost control. They're seeing a lot of strength in their export business.
Oh, interesting.
13 of their top 20 export countries are seeing growth. And they've kept international expenses pretty stable.
So they're showing strong performance domestically, A&D internationally.
Yeah, which is great news for investors, right?
Definitely.
And we can't forget about their supply chain solutions segment.
Right, supply chain solutions. Tell us about that.
This segment delivered an 8% year-over-year increase in revenue, ended up at $3.4 billion. Their air and ocean forwarding business is seeing strong demand, especially on routes coming from Asia.
Interesting. So even with all the uncertainty in global trade, they're finding opportunities.
Exactly. And their logistics business also helped with revenue growth, thanks in part to their acquisition of M&X, which helped expand their capabilities.
Okay, so we're seeing positive momentum across all their segments.
Yeah.
Now let's talk about their outlook, especially for Q4, the holiday quarter.
That's the big question, right? Q4 is always huge for shipping and logistics companies, but this year, with that really short holiday season, the stakes are even higher.
Right. And they did lower their volume expectations a little, even though they're ramping up hiring.
Yeah.
What are they saying about their financial targets for the rest of the year?
Well, for the full year, they've adjusted their revenue forecast down a bit to about $91.1 billion.
Okay, that's a little lower than their previous guidance.
It is, but they've actually raised their operating margin expectation to about 9.6%.
So less revenue, but higher margins. That says to me they're really focused on profitability, making sure every dollar is working for them.
Exactly. And that focus on profitability shows up in their segment outlooks too.
Let's break that down. What are they projecting for each segment?
For their U.S. domestic segment, they're expecting a 1.5% increase in revenue with a margin of about 9.5%.
So continued growth domestically, just maybe a little slower.
Right.
And good margins.
Yep. Internationally, they're projecting mid-single-digit revenue growth and an operating margin around 20%.
Wow, 20%.
Yeah, that international business is really strong.
It is.
And then for supply chain solutions, they're projecting revenue of about $3.3 billion with an operating margin around 9%.
Okay, so overall, it sounds like they're expecting a solid fourth quarter, even with the adjusted volume expectations.
Yeah, they're definitely aware of the challenges, but they're also confident in their ability to handle them.
All right, TalkTickers listeners, we're going to wrap up our deep dive into UPS's Q3 earnings soon.
Yep.
Stick around for our final takeaways and some things to think about. All right, welcome back to TalkTickers, everyone. We've covered a lot of ground with UPS's Q3 performance, from their return to growth, their strategic shifts, their plans for this holiday season.
Yeah, it's been a lot.
If you had to, sum up the big picture here, what would you say are the most important things investors should be paying attention to?
Well, I think, first of all, UPS is back on track. I mean, they're growing revenue and profit, even with all the economic challenges.
Yeah.
That tells me they're executing their strategy well, adapting to how the market's changing.
Yeah, they're not letting these external things derail them, which is a good sign.
Right.
It shows, operational agility, good planning.
Absolutely. The second big takeaway, I think, is their focus on efficiency and profitability.
Yeah.
They're not just chasing volume anymore. They're really thinking about the quality of their revenue, which is, I think, a smarter approach.
It's a more mature approach for sure.
Yeah.
They're making sure each package helps their bottom line, which is really important in an industry that, historically has had pretty low margins.
Exactly. And they're willing to make tough choices like restructuring management, streamlining operations. They have those new pricing models.
Right.
Those are all signs of a company that's, really committed to long-term growth.
Yeah. And they're making those investments in the future, too. Like that USPS air cargo deal. That could be a real game changer, especially during the holidays. And they're still putting money into automation and technology.
They're thinking long-term.
Yeah, which is what investors want to see.
Exactly. They're not just reacting to whatever's happening right now in the market. They're building a real foundation for the future.
We do have to talk about the holidays, though.
Yeah.
That short shopping season is a big deal.
It is.
It's going to be a crazy time, and we'll really get to see how well they can execute under pressure.
Definitely. But it sounds like they're doing what they can to prepare.
Yeah.
They're adding more workers for the season, working with customers to figure out what volume they're expecting, using technology to be as flexible as possible with their network.
Yeah, they're not taking it lightly, that's for sure.
Nope.
It'll be interesting to see how that focus on revenue quality holds up during the holidays, too. Will they stick to their pricing, or will they get caught up in a price war?
Good question. And how will that USPS deal actually work out in Q4? Will it bring in the revenue and margins they're expecting?
A lot of questions, and we'll see how it all unfolds over the next few months.
Yeah, but one thing's for sure, UPS is changing, and they're clearly trying to become a more agile, efficient, and profitable company.
Yeah, I think they're setting a new standard for the industry.
I think so, too. It'll be interesting to see how their competitors react.
TalkTickers listeners, as you think about UPS and what the future holds for them, here's a final thought. If they can make it through this holiday season and keep that focus on revenue quality, could they actually become an even stronger player in the logistics market?
That's something to think about, for sure. Until next time, stay tuned to TalkTickers for all your earnings call breakdowns.
We'll be back soon with another deep dive into the world of business and finance. Until then, happy investing, everyone.